graph, and it shows so the greens are the H values, and it shows the number above it that corresponds to the graph, and the L's are the red values with the number that corresponds, and that's just the number of trading days. It was 2 trading days to hit the low, 1 trading day, 3, 4, 5, and number of trading days to hit the high. So we've kind of got 2 things going on. So let me reopen this. I want to make sure we get the right data. Because I need to make sure I've got today's price action. I always do wave 1, because that thing takes whatever you throw at it in here, it takes that information and graphs it. If you have bigger fractal intervals sampling, and it's going to reflect in here. So we want the tightest stuff we can get, which would be a daily 1 for the levels. So we've got 2 things going on here with our levels. We've got a continuation, because we're already short. This is today's candle, the L1. So we're already short. So a continuation would be we go down some more. So the first thing is to get our continuation side. That's the L values. So what I want to do is I want to make sure it says pivot. Here's our pivot, because this is our frame of reference for the market, so we can get our values correct. So the first thing is we make sure that we're in sync here. So we want to use a pivot for continuation, and we want to look for our next value down, which is L2s. Because after L1 comes L2, if we get assigned a lower low tomorrow. So we want to find our L2s. So we come in here and we sort by histogram. It makes it easier to see them. So the next thing I want to do is, so I pick sort, make sure I'm on pivot. I hit the button, that brings in the most current price, and it was 290.27 was our close, and that's what we need to use. So now I move to the set of L2s below our green line, because when I hit this button, it automatically sets my green line. So I go ahead and push down. So minus 2.7 from the pivot would be really this next set of L2s. And you can see there's symmetry there. They're all flatlining, so which is a good sign. So that brings us to 288.26. So I come over to my graph, and I pick my drawing tool, and I go to 288.26. So it's 288.34, 28, it's close enough. I now mark that as 288.26. I mean, there's within pennies and stuff, it's not going to matter. So, because it's trading. So that's my first level down tomorrow. So let's say we do have an L2. That would be my first target tomorrow morning. And if I wanted to take a put contract right now at close, which is totally valid, like look over here. We've got a 67% chance tomorrow of carving out an L2. So if I wanted to take a put contract, come down here and I say, hey, what's my lowest hanging fruit on the tree? Remember, I hit this button, it synchronized me. So the next lowest hanging fruit's those 2s right there, right? So I come down there and it gives me my reading. So like 288.26, 287.96. So it's right, you can adjust it up and down a little bit to see.
Yeah, you can make a little zone or something.
Yeah, exactly. You're kind of making a zone because at the end of the day, stock trading is kind of like a little game of horseshoes. It's not like people that want perfection have a hard time with price stock trading.
Yeah. Because if it doesn't hit that level, then but on something else that shows something, you're just gonna wait, and sometimes it doesn't do that. It's not perfect.
Exactly. And some guys will be like, well, it didn't hit the number right at the penny. Like, man.
Yeah, that's kind of what happened to me.
Yeah, and you want to be like, here's another problem regret, right? Like, let's say you come in here and you're like, okay, man, I like the 287.96 or, the 288.26. You can come in here and, like sometimes I do this. Just take that little graph thing and kind of do that for a zone.
Yeah.
I kind of create my zone. Worst thing in trading, and people do it, and I'll kind of do it too. I try not to. So you create this zone. Then it comes down here. It hits that two way down there at 283. And then a lot of times guys will pile out, maybe get their 50% or 34%. It goes down on to make 100%, 200, 300, 1,000%. Yeah. So what you can do to alleviate that is I'll come in here and find my other lower levels because it's a ladder. If that rung up there breaks, we go to the next until we finally hit the ground floor. So yeah, we're just kind of finding these values. And I used to trade fibs and stuff, wave, all that jazz. And, the thing is, this I like because this is market feedback. This system in here, this data is rolling out. And it's bringing in new data every day that rolls out.
Mm-hmm.
And it's tracking these movements up and down. So I know what these means. I'm getting 50% of the move here. So I know when I started in L1, if I just placed a trade and I was patient, I didn't get all weirdo about it. I just let it play out over 2 days and I close it wherever it lands. Like 50% of the time or even better, because see this curve? It gets up here faster than 50% of the time. So if you count all these and what's in front of it, we're up here more than 50% of the time. And we're probably, it looks like down here more than 50% of the time. So if I could just manage my nerves, and get in here and just let it run for 2 days and close, not like micromanage it every day, try to look at it and be like, oh my God, it's going down, it's going up, it's going down. Just let it play its course.
So what about the other two? That's like a little bit above that too, okay. Right there.
Okay, so if you come in here, so we've got a bunch of twos right here. We've got, now let's say this two qualifies, this two, this two, this two, this two, because they're all kind of around the same area. They're probably like 20 cents, So then the next thing is you could be like, okay, where's my next two down? So it'd be right there where the mouse cursor is. So I'd come in here and take that down, right? And then I could get my 285.59.
Yeah.
I'm in here throwing my 285.59,
So you don't need to get every two perfectly.
No, nah. I wouldn't try to. If you get every day, realistically, doing what we do is ridiculous. Because some days, I have 400, 500, 1,000, 2,000%. And to expect that every day is kind of ridiculous too. So, even if we have these tight ranges like today, let's say you manage some of these trades over here, like this put, or initially, like on the call that I first did the BTO on. Wherever it's at, I don't know. Anyways, we've got our little sequences here, our green, red, green. That was 35 to $1.34.
That's a lot.
Yeah, it's, and even doing these, if you manage them,
you get some good scalps.
Yeah, exactly. Like if you're not you're like, oh, I'm kind of more starting to get in the middle of the day. I'm past 10:30, 11. This is a 12, 11, 12 o'clock, and we kind of know in there, it's never a lot of trending action, kind of scalp it, or worst case, like come out with kind of even. So I can show the upside now. So here, we're just walking down through it, right? So we're finding our twos, and that gives us a range.
Yeah.
Well, when we come over here and we start trading tomorrow, like these would be totally legit for tomorrow. We can be like, man, if we could break that range, sit on my hands and see if I can knock this range out. If I can knock that out, I'll see if I can hit this guy down here. So you kind of just, see, we want him to break going down. I mean, we just want to keep waterfalling through this stuff. It'd be beautiful to hit that lower two right here.
Yeah.
So that's just how I do it. It's just kind of like letting it kind of waterfall down. And then we've got some other things I was showing today too. I can touch on that. So now let's do the long side. Now this is where it gets weirdo. This vector number 290.27, when we establish like an H1, this number is going to replace the pivot. So this pivot 296.26 will become whatever that vector was.
Yeah.
So in order for us to figure out what's going on tomorrow, we're going to pretend that this becomes the pivot number. The way I do that is
290.27?
Yeah, the 290.27. If this becomes a pivot number and our candle's up in this area, I mean, we want to be measuring what we've got going on up here. We want to know where this cluster's at, and these other clusters, to kind of get our targets. So what I do is I say new pivot, so 290.27. I hit my button, so I get synchronized up here, and now I start walking through my ones. So I get up here, so now I'm kind of in the first level ones, just 292.30. I come over here to the graph, so my 292.30. Try to at least.
Okay.
Now I've got that level. And some of these, and I pay a lot of attention to and put more detail. Some of these, I get within just pennies.
Yeah.
Highs and lows, So I put that in, then, I'll mark it like, it's like, like 292.30. And I'll go resistance / target. So I know tomorrow, and it just happens without fail. So, I've got a little teeny tiny baby one there. I'm just going to skip over that one because I don't really care. But so I know without fail, if we get a 1H tomorrow, we're at least going to be hitting that. And now I'll go to the next one. And you can kind of see here, they are a little bit grouped on the tops. So I go there, 293.17. Just toss that one in. 293.17. So it's just right above that,
Mm-hmm.
Now I'll just label that too. So you can just keep walking on up, and then definitely put the mean in. So the mean.
Yeah, that one right there.
Yeah, 298.69, because that one's pretty important because that's the middle of our data of our histogram up. It's actually better than the middle because a lot of these are hitting it. So 298.69, which that's money right there. 298.69. Right around there. So that would be the ultimate thing to hit. And then what I'll do is, so after I do all that, tomorrow we'll have 0 DTE again. So I'll put my calls in. So I'll put on the side. So like on the 298, I'll bring them down just ever so slightly. And the way I figured it out too is the 298.69. Let's go over here and see what's tomorrow, the 31st. So 298.69. Out of doing this a bazillion times over, I know that I like to stay in about the 20-cent range because I know through real live trading that this 20-cent range can become, $1, $2, $3, $4.
Mm-hmm.
And when we stretch it, not to say that we can't, since we're at 298 over here, it's not to say we can't stretch it into a 297, this 10 cent, but going into more of the 20-cent range, like at 295, 297, help increase our probability of a move on the contract versus going a little too far out. I'm not saying it won't work. It's just, we want to try to hit stuff that has more higher probability. So I know from real live trading that this 25-cent range, worst case here, but more so the 25 cents. So what I do is I put the 295 on, and it's 23.25. So I put the previous day's price. I have a reference. I just put that on. And a lot of times, like when I'll send the graphs out, people, they'll use these. I'll use these myself too. Sometimes I'll revise them in the morning after I start trading, depending upon what happens overnight.
Yeah.
But yeah, so that one, if we had an H1 and we're lucky enough to catch this mean, that contract would go to $4.
Mm-hmm. Would be very nice.
Oh yeah, and we'll catch those sometimes too, and it's just unbelievable. You're like, how could something 7 cents, 25 cents, whatever, go up like that?
Yeah. So my final question, which will really help me out a lot, because I have a big problem with this, is like I usually. Is it okay if I screen? Oh wait. Yeah. Is it okay if I screen share real quick?
Yeah.
Okay. So my question is how do you get your bias for the day? Because for me, when I do this, when it broke this level right here, right, I would be looking for calls because I don't really have a bias to the upside or to the downside. But when it hit this level, if I could have caught puts, if my bias was bearish today, if I caught puts right here on this level, that would have gone very nice. So, and I just normally don't have a bias for the day because I don't really know how to find one. And you were talking about how you found your bias earlier by using the percent and the open to close or what it would close around.
Yeah, and I don't know if you caught how that works. So for bias, the first thing I do is look at stats on those charts and the options analyzer, and I do it for 200 days. And I think Aaron, he'll come in here, Milk, he'll come in here, and I think he'll do I think he likes 500 days a little better. I'll do 200 for myself. So I'll look at these stats. So on Friday I saw 67, or excuse me, on Friday we were at 19 for a high, which led us to be 81 for today, short, so 81% stats for today. Then on Sunday, I looked at the options analyzer and I pretended to be market maker, and I was like, where do I want price to close today to benefit me, holding everybody's money? Because I want all these contracts in the chain to expire as close to worthless as possible.
Yeah.
Yeah, so when we get over here, you can see the C293 we were watching. It ended up at a penny on ask, euro a bid. The put 291 ended up 37 on bid, 60 at ask, and on down the line, if you look at them, they're all trying to move to zero. Mm-hmm. So the options analyzer, when I come in here and I pick the contract for today's expiration, and then I set the price when I synchronize it and push my button, that levels like it out for that point in time. And it's not real visual, but what happens is in the corner up here, I show the, let me do it right now. So I show the percentage of contracts that are going to be in the money, that are going to make anybody any money. So let me pull it up for the 30th. I'm pulling it up right now. Okay, so at close, I don't know if you see my screen again, but
I do.
Okay, so see it says total contracts 151. So there's 151 contracts in here. Both puts and calls. Now, out of the 151 contracts, how many of those, based on our reference point, and that being 290.27, are going to make money? And you can see, you can click on the percent gain at target, and you can scroll down through it, and you can see that from that point of reference, that there's only one, and there's an idiosyncrasy with contracts, the way they are priced. But this is the only one. If you could buy it at bid and sell it at ask, would make you 21%. But at any rate, you want this number of contracts that make greater than 0% at 0, or as close to 0 as you can get. So when you click up and you start adding value to the queue, you can see the number of contracts that make better than 0 is rising. And you can see the winning contracts is increasing. I click down, you can see now it's decreasing, it's declining. And as I click lower, now we are increasing again. So the puts are picking up value. So now Aaron Milk, he'll use gamma, they'll show gamma. And that's all this is. This is showing where this price in the queues needs to be relative to all the contracts. Because if they start dropping the price at the close, I mean, all of a sudden, you know, the options are a dead instrument. All of a sudden, the risk starts increasing. Like as I click down to 2%, now 21% of the contracts are starting to be in the money.
Yeah.
Being paid out. So that's what I did earlier in the day. I came in here and said, hey, look, and I did it yesterday, Sunday too, but so earlier in the day I was kind of illustrating it. Hopefully my mic was working at the time. That the closer I get to 0 here, the closer this is going to put us to our closing price for the end of the day.
Yeah,
so we can do the same thing tomorrow, and you can see it again.
Yeah, because that kind of helped me actually for one of my plays. I don't know if I was supposed to use it like that, but like I saw it go into a level or something, and then I was like, oh yeah, the close is coming up pretty soon, and Russell's stuff said 290.56 or whatever, so I went into a put and it went up for 100%. So that was pretty nice.
Yeah, so you can use it that way. I used it that way on AMD on Friday. 7 cents to, I don't know, $1.30.
Dang.
In like no time. Yeah, because I was pre-computing where it needed to go, just like this, and I did it on AMD. The thing is, you want to do it on stuff that's liquid. You don't want to do it on some podunk stock that has 5 contracts open. You know what I mean? It's got to be like, you know, if it's an AMD, Q, SPY, Apple, Google, whatever, just liquid stuff that has a lot of contracts. And this kind of works for all of them. Like I was showing AMD the other day on Friday. Yeah, it kind of, you know, really moved. Yeah, so it really helps because you can kind of gauge. Now, doesn't mean it absolutely has to end there, but it gives you a good probability. It gives you an actual target. you can use, because otherwise running into the close, you're like, I don't know what'll happen. I mean, maybe it goes up, maybe it goes down, I don't know. So I noticed over in A-Train's Discord, the one guy's like, oh, I think it's going to dump. And then that's when I posted those stats. I was like, nah, it's based on this, because he seems like he's guessing when he trades. Doesn't really seem to be using anything concrete other than what he thinks. And it's all about numbers, it's a business.
So for this thing to work, you want it to find that number where you want it to end on, you want like every contract to be 0, because that's what makes them the most money or whatever. So that's why they want everything to be 0.
Yes, that makes them the most money. So that implies here that you find that sweet spot. Yeah, because when they're writing out contracts, you can imagine, like, let's say your business is to write contracts out, on stocks, right? So you write out options for. So you want those people to keep the money. You want to be able to keep the money. We don't want that. We want to be able to take it. But knowing where they're at helps us. Because, like, I don't like that it did it like that. It's not my choice for today. I'd rather have it plummet 100 points and be in puts. But I got to be realistic and be like, what do they want? Where are they going to try to get this price? Because, like you said, it helps you because you can go like, okay, we've moved up, and now we're going to come back down. And I'll show you in AMD what that looked like for me on Friday. Using the same exact technique. Intraday I checked. So this was me on Friday on AMD. I opened the contract up, and I don't think it probably made too much sense. But Sol was up here, and it went from there to right here. And that was right on the number that I calculated, doing the same exact
close.
Yeah.
So you got into puts and then perfectly right there. Yeah, that's why it would probably help a lot to find that out.
Yeah, especially because we're running into one of our key time frames, which is 15:30. And so I was like kind of pre-positioning. So I looked at it and was like, I think it was the 76 or something like that. Let me see. So I did this. January, what was that? The 27th? Put 76. It was something like that. As best I remember. Yeah. Yeah, so this was my notes from there. So I calculated based on what it was, it'd be about 73 on this, and that's where the dot ended up. And this was just from that. So it was down here and just kind of, which is kind of crazy to think about it, like right at the close. I mean, it just kind of, and then too, you can have them just close out the contract. So some of these, I don't do anything with them. I'll buy them and just let the broker close them.
This feels illegal, but it's not with how good it works for it. That's what my dad said. I mean, my stepdad. I was telling him about this and how it's like very nice, and he was like, "The FBI is going to show up at her door in a couple of days," and I was like, "Oh, probably not."
No, it's like my mom says the same things. So you're not alone. My mom tells me I'm insider trading.
Yeah, but it's not
insider trading. I know. Because I'll be like, oh, I made they'll ask, my family asks, oh, what do you do this week? Oh, I made 1,000% on this and 100 on that and lost 10% on that or whatever. Oh, my mom be like, well, that's insider trading. They're going to come and get you. Like, it's insider. That's Congress. Congress insider trades all the time. It'd be nice to have that privilege and luxury, but yeah. So now it's just using. So we know stuff like a lot of other participants don't know on the retail trading side. So that's what kind of helps us out a little bit.
Yeah, I just need to get my stuff ready for tomorrow because if I have like a whole idea, I'll definitely be able to trade way better than what I've been doing.
Yeah, having these levels on here, you see, like Aaron, he puts a lot of time and effort into his charts, like the SPX, and I think he's doing the NQ also. And yeah, I kind of wing it. I'll throw some levels in. Sometimes I'll do more detail. It just depends on how busy I am with other stuff. What hurt us today, and everybody was feeling it, was this, our gap down. So one thing to keep in mind is the market. So it kind of moves around at the one. Well, Wilder, I think, came up with it, ATR, the average true range. So the session's always kind of, for Qs, it looks like it's around 4 points right now from high to low. So what happened was from Friday to this morning, we burned up a lot of that. So now we're range bound. It wasn't really
That
much left. Yeah, so that kind of screws us up. Because what we're doing, like Aaron trading futures, like the ES and stuff, SPX, they can trade kind of like 24/7 or 23 hours a day, right? I used to trade futures really hot and heavy commodities. We're not. I mean, we've got like this to make a decision, and this to day trade, and this to position for the next day. So we only have about 20% of the session to get an idea of what to do, whereas they have 23 hours out of every day to determine. That's one thing about options. They're very hard instruments to trade because of all these constraints. Because if they would let us trade our puts for 23 hours a day, I mean, we'd be watching this up here, seeing our fractal stuff, and being like, oh, it's breaking. We'll go here on Sunday, and we just write it down. And we'd be like, oh, the fractal thing shows we might get here, and then close it and clean up. It just doesn't work that way. They really hurt us with the rules. And FINRA and SEC, they're like, oh, it's to protect everybody. Yeah, your buddies. Doesn't do us any favors. Because the vector too, yeah, it's all crooked. It supports the institutions and stuff, not the people.
Those levels worked out very nice right there.
Yeah. And the vector, it helps, and got some good tools. It's just we got issues here with execution because of our window of opportunity. We've got this overnight is huge, and then our little black window of opportunity is so small. It's like 3 of these.
Yeah.
It's like everybody else is sitting there like, yippee. We're like, okay, we're screwed, man. We got to come in here, make magic. And then our only really big move was off this open right here.
Yeah, that big.
Yeah. Yeah.
I'm just so mad I didn't catch that. If I had like the idea bearish on the day, I would have probably tested it out. Not obviously like put everything into it, but I don't know, that would have been like 1,000% move or something.
Yeah, I think it was. I had the contracts up and stuff, the puts and everything, and it was. Well, this was one of them, 291. So, the best was 38, buck 28, and then I also put in the 289 just in case. I was kind of hoping we might break down more. Let me see what that was the deepest one I had. So it was this one. So I don't know if lucky from 12 to up to 0.60. This 291 correlated to this up here, which was in the graph over there.
But I didn't care about that 293. It was just like, nope.
Yeah. It bumped its head right here, so it's fighting it a little bit, and then it kind of finally started zooming through it, and you know. So I put in the 290.63. So early this morning, when we ran the number, we figured that out. I don't know. Trading's difficult.
Yeah.
And it's hard to make money every day on it. It's hard to be perfectly right every day. But so tomorrow we've got our 67% odds of carving out an L2. Yeah, so so that would imply that we have a close lower tomorrow than we did today, a lower price tomorrow. Now, it doesn't mean that we can't wash out. High. Yeah, and have an intraday reversal. It just means that at some point we should carve out that L2. Because after that, see, we drop back down to 30% odds that we have an L3. So it's like in our histogram, we get this L2. And then when we look over, we got an L3 there, one there, one there. Not a lot of them. Nor
that was actually a question I was going to ask is like, when is it considered a low 2 at the end of the day? Like when it closes, or is it like right when it passes it?
So it's based on our data set. Since this is daily, this is always at end of day. But it doesn't mean that the close price. So, like, let's say the low is set at 11 a.m. or 10:30 a.m. and it gets assigned an L2 at 10:30 a.m. It could start to rally off of that.
Yeah.
But the way I look at these, it's from end of day to end of day. So if I wanted to let's say I wanted to try to catch a max move over the course of 4 days, and I go in at an L2 or an H2, and I do puts, I would look to an L2 to close them out. So I go at end of day to an H2 to an end of day at an L2, ideally. Mm-hmm. So I would be like, from that high session to the low session. And then if I come over here and look at that mechanically, so sometimes it works, sometimes it doesn't. So if I did a H2 here at this close, and then I did an L2 at this close, we were way back up here again. So an H2 from here. So here I'd want to get out, because I always look to the left, like I always mentioned. So here I'd want to look at this double bottom, because this is suggestive of where it's going to go. Like today, it's suggestive that an L2 would hit the double bottom tomorrow.
Yeah, which would be 287.
Yeah, 287. And if I want confirmation of what that looks like, I kind of look back over here to the left, and I look for these double bottoms, like where we have something. Here we didn't achieve one. Here we achieved. Here we achieved one. So I kind of just come over here to get an idea how it's looking for prior double bottoms like that, That one, of course, is kind of outstanding. And here's another thing. In the technical stuff, really, you're supposed to use more of candle bodies versus shadows and wicks. So a lot of the times, the systems that you write, that I write, I would look more at candle bodies. So that's just something to keep in mind when trading too. I mean, I love the idea of these lows on shadows and highs on wicks, but the candle bodies can be a little more important. So, so tomorrow, ideally, we kind of come down here, and then it's up to the thing to decide, does this fall through?
Does it just bounce? Yeah.
It could bounce off of it, yeah, because on some of these other lows, like the other day, I forgot what it was, I played something, I think it was Friday. I was showing something at a double bottom that bounced. I can't remember what it was, but anyways, yeah, I moved a lot off. Like right here is kind of a mini double bottom.
I also have a question on this because I don't really get it. So, like, where is the close? Like, is it the top of the red candle or the bottom of the red candle?
Okay, so the close on a red candle, it's always at the bottom of the red candle.
Okay.
Green candle, it's always at the top. So when you look at the red, you're like, oh, it closed down here, closed down here, closed down here, went green, closed up here. So when
So
trading,
on that double bottom,
right here.
Yeah, so on that one it bounced because it closed at the. It's a green and it closed at the top. Okay.
It closed at the top. It closed at that black line I drew in. Yeah. So one technique I use, like, and I mentioned this, when we're going up, like let's say you're holding a position and you're like, man, where's the max value I could maybe get out of my calls? And I look over here and I look at my wicks. I'm like, what are those wicks looking like? If I'm not seeing much of a wick, that means my close price is going to be up near the high of the day. If I see a lot of wick like here, I'm like, oh my gosh, it ran up and then it came back down and it closed way down here. So here, the close price was at the high of the day, the high of the day. Here, the close price was a little off the high of the day. This was at the high of the day, a little off the high of the day, at the high of the day. See, because our wicks are telling us. So what I do is not to get freaked out, because when you're watching intraday, you can sometimes get freaked out. So you're like, oh my God, I'm getting, it's going through the vector, or it's crossing my moving average, whatever. So what I'll do sometimes, I just come in here and I watch the action through the candle. Like on Friday, we had this candle, and I came in here and was just, I'd click on it occasionally to refresh and see how my candle was faring out the day one. And then I looked across here and I was like, man, where's my, hardest core distance, which was right in this area. So I kept clicking and clicking. I'm like, okay, it's getting through. It's getting through. Will it break and continue running?
Mm-hmm.
And I also know we've got that going on. And I don't know what this looks like on a linear graph, but on here, So this was, on here, it was very suggestive that would be the high on Friday. Yeah. But when we were way down here starting out, a lot of people would be like, oh, I'm up 50%, I'm cutting, or I'm up 100%. And on the graph, I came over here and I put in, this is the objective, was up here. So we started off down here and we ran up there, and I have most of my calls all up to here. And it was because I was coming over here, clicking on it. And I was seeing, okay, we've got minor resistance, some little imprints here, minor. So I'm like, I bet you we could break those. And I was like, I don't think we're going to have any trouble until we start hitting this thick black stuff.
Oh, that's what your idea was on Friday, that it would reach that black trend line or whatever?
Yeah, because if you look over here to the left, it supports that conclusion for decision support. Candle came up, hit our black line. Candle came up, hit our black line. This one came up, topped out at black line. Yeah. Through it. That's what I was hoping we'd do, get a nice green explosion. But, so this one came up, this one came up to it. So I look across here and for my decision support, I'm like, okay, what is likely? If we have a 2H, where would that 2H likely end up? Because I come over here and I look at my 2H and I'm like, we've got a 56% odds of getting a 2H. So I'm like, well, that's better than a coin toss. So quite likely, if we can break this high on Thursday, we can continue to run. And if we do run, I'm going to look across here. And you can also move this line. That pivot line moves.
Yeah.
So I'll, just as a quick thing, I'll just take that, doing something. I'll take that pivot line and I'll just move it up like that. And then I'll look across here and see my prior highs. Because it's weird how it works. Mm-hmm. Like those highs are defining tops across there. And then I know, man, if it can break, we can get one of these rockets through there. So just kind of be patient and See what happens. So yeah, you can just kind of drag that around. Same thing with the short side. You bring it down here, and then I look across and I'm like, where's my next kind of lows at?
Yeah.
And they're kind of down here at the double bottoms. And then I just kind of come down here. So yeah, so another valid thing is you can move that pivot line down through the lows looking across here. So if you don't want to go in here and look at this, another technique I use is just moving that pivot line. So I'm across, scraping my lows, scraping my highs.
Yeah.
Yeah, so, and it works. I'll come down here, scrape that one. So then I know when I get there, I'm either going to take a pause or I might have a reversal come into the market.
Mm-hmm.
And it's kind of like,
What happened at 12:30? Can you show it real quick on your Thinkorswim today?
Yeah. The one today, 12:30?
Mm-hmm.
Yeah, so right here. So I put in these bars. So this red line and this red line. So there's 4 key time frames I look at. 9:30, of course, because that's when we open.
Yeah.
The next one I look at is 10 o'clock right here.
30 minutes after open, and that's literally right where it.
Yeah, see that?
Mm-hmm.
There's a reason for that. So a lot of the professional traders, they will kick in at 10. They don't care about if they lose out here.
Mm-hmm.
They start at 10 and they'll run till 12. A lot of them. Like there's classes in Phoenix, there's trading schools. And they teach, we teach you to trade from 10 o'clock to 12 o'clock. 2 hours out of your day and you're going to be a multimillionaire. So that, and it's true. So there's a lot of guys that come in from here to 12, and you'll see right on the dot. And 13, same thing. Sometimes we have periods like where we start, either we continue with the trend or we get a reversal right around that area. So the other day I marked the 13 on Friday. 10 minutes later, we started the trend continuation yet again. And it's because this 1300 has a 4-hour aggregation come in.
Mm-hmm.
So there's new data for technical analysis to use to make more decisioning. 4-hour candle kicks in, plus our 1 hour, 2 hour, 30 minutes, 5 minutes, 1 minute. Everything comes into alignment at 1300 with the addition of that 4-hour candle. So new information comes into the market, and then participants' systems are like, okay, do I continue long or do we roll over at 1300? And maybe the day before I marked it.
That's kind of what I did there on Friday.
Yeah, because you saw that, right? Made like 400 or 500, 600% off of that.
Because I saw around 13:30, like that ghost pattern was forming, which kind of scared me. But like once it broke that level, kind of, I entered.
Yeah, which was the right thing to do. So these ghosts, I've mentioned in our room over here, that they do not typically play out on a bull market. So these ghosts, I just point them out, and I'll kind of highlight it just so everybody's aware. Typically on a bull market, this is either your behavior. You get the 2 highs, and then this other high breaks, which did, and then we test. And this is classic behavior in a bull market. So if you do see a ghost and we're in a rising market and we've got higher objectives, definitely keep an eye on it, but you can kind of discount a little bit and be like, you know what, I'm going to wait. I don't know if that thing's going to play out. Because it turns into an M, which are really strong for me. Rising M's. Yeah. And then, so that worked. Yeah, trading in the afternoon worked good. I mean, with that bump up.
That's normally when I actually make my big percent gains.
If you have trouble down in here, like everybody kind of does when it
I have
opens,
trouble.
it's so confusing. Then trading at 10 or in the afternoon is totally legit. Like even here, coming down into the put, so I revised, did the 291. Let's see in the afternoon. I mean, we could still make money on it in the afternoon. You know, so it's not like if you're not there in the morning, you miss out. Especially if we have volatility, we're moving around. It's all we need.
Yeah.
Because here we broke out of our pattern. We had our green, red, green, kind of broke out. 62. And then we kind of had the little ghost pattern up here, which is starting to be a sign, hey, I better take it off.
And went right back down.
Yep, went right down. So everybody else is doing the same thing we are. They're reading this stuff. Like, oh my God, here's kind of a weirdo looking ghost a little bit right there. It's kind of a weird left hand.
Yeah, the good thing is that the next couple of days I have no school because of bad weather, so I could actually use the system and Thinkorswim and everything together.
Yeah, that'll help a lot.
Because at school, I literally just go off of levels, which does work sometimes, but like, not really.
Yeah, it's hard. I hear you. Whenever my wife and I go on vacation, I'm on my phone. I trade like I'm handicapped.
Yeah.
I mean, it looks like anybody could do trading better than I could because I can't see anything. I don't know what's going on. I feel naked. I like to go in here and see these levels, see these imprints. I don't know where I'm at in this pattern. I feel so irritated.
Yeah, that's why probably around like 12:30 when I'm at school, I could do some good trades. And if I just don't trade in the morning, because like the reason why I'm still down on my account is in the morning I normally like lose trades, and then at like around the end of the day, 12:30 to power hour and everything is like when I make it back or a lot of it back, but I just don't have enough buying power to actually see profits.
Yeah, gotcha. Well, the beauty with this is too, where we're playing down here, 30 cents and stuff. I mean, even, doing one contract.
Yeah, you can still make a lot.
Yeah, because like the other day, Corn, one of the guys in the group, he's using the alpha thing out there. I mean, he was showing taking $200, made 4,000.
Mm-hmm.
I mean, off 200. I mean, that was Friday. Yeah, and I do the same thing. Sit here, I do $500 allocations. I'll do like a 1x or 2x or 10x, on $500. So yeah, you can, but I could also just buy one contract for $37 if I'm not, if the price action seems choppy or something, or not do anything.
Yep.
So it gives a lot of flexibility. Yeah. So yeah, all your friends and sounds like stepdad and stuff, think you're cheating the system somehow with all this stuff. Yeah. So it sounds like tomorrow. I see you think you can figure out how to put the graph together now, at least the levels, your lines on
the
there.
levels. I already kind of did that by myself, but like it wasn't perfect. But nothing's really perfect.
The best thing is, I mean, it's great to see me putting something or Aaron putting stuff on his charts, but to figure it out yourself.
Yeah, because if you can't do that, then.
Yeah, that way you're not reliant. I mean, here, like my system, I plan on keeping it out here forever, Thinkorswim, the same thing, but, at least if you get the idea of how to do stuff. I mean, even if the worst case you had to go back to, let's say, you're doing linear graphs. At least you have an idea. You can find highs and lows, and because you see here, it's like so obvious. We're looking for breakout of candles. So we're looking for that candle to be broken to create a new high, this candle to be broken to create a new high. So it makes it easier because you can tag these highs, and then you can find your next area. So it's more, to me, it's visual, like, because I can see, it's bullish. I can say, oh man, if I can break out, if I can't break out. So yeah.
Dang, what days were those at the beginning? Those big candles, long ones.
Yeah, I caught a lot of these. I mean, it's crazy because you could be like L1, check the odds, and be like, oh, I got 20% odds for getting an H1. I'm like, oh, at the close, I'll buy it, and then it does that. And it way out me. So, and then the flip side is like maybe this was an L1. You're like, okay, I'll try those odds. Well, it doesn't work out. Well, look where it opened, and then it went up. I mean, you still have flexibility here to not hardly lose anything, because you could be like, I'll cut it if I get below my previous day's low. I mean, here is just like, I don't know. These are crazy because it's like 3,000%, 3,500.
Trying to figure this out. Is that perfect? I mean, that's kind of. Never mind, that's not really a close. This is where the wick is. I was talking about that, where the black lines are or whatever? There's
down here.
The dotted blacks, where we closed at kind of, 290.27.
Yeah. These lines right here, this dotted line.
Yeah, what is that?
So that tracks our current candle.
Oh, okay.
So what's happening is, as this candle comes below or above, it's telling us this is our low. So visual.
So you kind of look to the past.
I'll look across quickly. Yeah, like where am I in my candle?
Yeah, like right there, you see the kind of close of that one day.
Yeah.
Right before the big candle, at the very left, right there.
Yeah.
A little bit past.
The other way.
Yeah, right there. Yeah. Not there, but I mean, that too. But the one right there. Here? Yeah, where it closed, kind of. It's perfect.
It's perfect. They always do that. They always seem like try to match. Because it closed on that one. Here's another where it closed. So yeah, it's weird how it's just because the systems are doing the same thing we are here. They're just compiling a list of price action and being like, okay, where's a last close? We'll land there. Type deal. Yeah.
Hopefully it does what it did that one day right there. You see where the black line is, it is right there, then it just dropped off the next day. Hopefully that's what's gonna happen tomorrow.
Oh, yeah, those are beautiful, man. If we can get into that, it just cuts down through here and matches right here. All in one candle. The great thing would be is if we have this, and then our candles are going down here and up there and down here and up here, and nobody knows what's happening but us.
Yeah,
that would be the greatest thing in the world. But yeah, and you can also see here when we have these ascending patterns. I look for this a lot. We don't have anything going on like that right now, but because usually when we get into this last one, usually we get this crazy action out of it, which is awesome. Right now we've got this M developing, so up, down, and these M's, when we look at them, here's kind of one. So I look at it this way. I'm like, okay, here's an M, starts here, up, down, and I look at this strike down, this last strike. Usually it gets lower than the beginning. So here's the beginning of our M, up, down, up. So this would anticipate to be lower than here, ideally. So that's something I'll look for tomorrow. Doesn't mean it'll happen, but I'll see these M's a lot, and
Yeah, that double bottom could be a good bounce.
yeah, that could be a bounce if we don't bounce and we could slice through it. So
Or it just might open at like 290 tomorrow. I mean, not 290.
yeah, I could do that. I mean, the worst would be like over here we kind of have this congestion. Or the worst, it's like just hopping around.
Yeah.
It's always nice when we get a run. Be nice we can get a run down. I don't know, maybe.
Mm-hmm.
Yep. So we'll see tomorrow. We'll run some things and see what it's showing.
Yeah. All right. Well, thank you for helping me. I gotta go though.
Okay. Yeah, no problem.
Bye.
Fine. All right. Bye.